Hello and welcome to the Business Payments Coalition e-Invoicing Overview webinar. I'm Jean Rourke from the St. Louis Federal Reserve, and I'll be your moderator. Our presenter today is Todd Albers. Todd is a senior payment consultant from the Federal Reserve Bank of Minneapolis, working with the Payments Standard and Outreach Group. Before turning our call over to Todd, I'll run through our call logistics. If you haven't joined us through the webinar yet, go ahead and click the link you received after registering. For the best webinar experience, use the FAQ document, which can be found using the Materials button in the webinar player page. I'll highlight just a few important notes for you. You can listen to the audio through your PC speakers or through the phone. If you use the phone option, slides will not sync with audio unless you change your settings. You can do this by selecting the gray gear located on the upper right corner of the slide window just above the presentation. From there, you should see a few options in the media chooser, and you should select the phone option. Now, only select the phone option if you're consuming the audio through your phone. You can expand the size of the slides, and to do that, you can select the Maximize button in the upper right corner of the slide window located on the webinar player page. And if you'd like a PDF version of today's presentation, you can access it using the Materials button. We'll be taking your questions today as well, and I would encourage you to submit them throughout the presentation. We'll announce them in the end, but again, we'd love to have you submit them at any time using the Ask Question button on the webinar player page. And thank you so much for sending us your comments and questions. We're looking forward to hearing from you throughout the presentation. And with all of that out of the way, it's my pleasure to turn our call over to Todd Albers.
Thank you, Jean. I appreciate that introduction. And I want to start off by thanking everyone for taking the time out of your schedule and joining the call today. The focus of my discussion is to provide you an overview of what the Business Payments Coalition found when it assessed e-Invoice Interoperability frameworks that have been developed in other markets for applicability for use in the United States. First, I want to introduce you to the Business Payments Coalition and touch on the 2019 e-Invoice initiatives. Actually, Jean, I forgot to tell you, advance the slide, please. Next, I want to cover off on the size of the problem in the U.S., how businesses connect to one another, what barriers and challenges these create for businesses, what opportunities if e-invoicing became widespread in the U.S. market, what lessons we can draw on from other markets, and introduce a new way businesses can connect with one another. Then I'm going to transition into what is an e-Invoice Interoperability Framework and discuss the 4 layers that make up a framework, and finish talking about the benefits frameworks can deliver to businesses, service providers, and the society as a whole. I will finish off by touching on the key findings from the assessments and provide a path forward for the U.S. That the BPC will follow from a next step standpoint. So if you move to the next slide, Jean. So let's start off today's webinar by spending a few minutes in introducing you to the Business Payments Coalition. Next slide, please. The Business Payments Coalition was formed in 2011, and it has over 650 plus members strong. It is an internationally recognized group of industry experts from corporates, financial institutions, service providers, and standard bodies who are working on initiatives that support and promote straight-through processing by increasing the adoption of electronic business-to-business invoicing, payments, and remittance data exchange. The BPC is open to anyone who is interested in these topics and who want to contribute their time and talents to overcome the many barriers to achieve B2B payment efficiency. For e-Invoicing, the BPC is coordinating a multi-year initiative with industry stakeholders to assess and provide requirements and recommendations for an electronic invoice interoperability framework for the U.S. market. The BPC has defined an electronic invoice as an invoice that has been issued by the seller and transmitted and received by the buyer in a structured digital format that allows for automated processing. Next slide, please. In 2019, the BPC conducted 2 assessments, which has resulted in the creation of 3 reports. These reports provide the background and methodology and why e-invoicing is a necessary first step to achieve straight-through processing for B2B payment transactions, with the first two reports on this slide here published on November 1st. The first report and the topic of this webinar is an overview of an e-Invoice Interoperability Framework, and it introduces the concept of the framework as well as the market challenges and benefits of addressing these and a path forward for the BPC work as we continue to assess U.S. market needs. The second report, the e-Invoice Interoperability Framework e-Delivery Network Feasibility Assessment, provides business and technology stakeholders with an understanding of the high-level requirements and standards required to establish an open, federated network of access points for the U.S. market in order to exchange electronic invoices. And then the third report, an e-Invoice Interoperability Framework Semantic Model Assessment, is planned to be published by year's end, and it will provide business and technology stakeholders with an understanding of the high-level requirements for developing a semantic data model for an invoice for the U.S. market. These were the 2019 initiatives that resulted in these three different reports conducted by the Business Payments Coalition. If we move on to the next slide, I would like to start providing you with some of that background information that I introduced in my earlier slide to help provide the context on the U.S. market and why the BPC is pursuing the e-invoicing work. Next slide, please. But before we get to that slide, I believe we have a poll question. So, Jean, do you want to go ahead and ask this question to the audience?
Yeah, you got it, Todd. Thanks so much. All right, so go ahead and grab your mouse. We're going to have a quick interaction here. So I am going to announce the question for you. You should have that box pop up on your screen. All right, the question is, I'll read it to you and also provide you with the responses. Question is, does the format an invoice is sent in or received in have any impact on on-time payments? So does the format have an impact on on-time payments? And your options are yes, no, or don't know. So go ahead and grab that mouse and respond as you see fit. And I still see results coming in, so I don't want to close that out just yet. So I'm going to give you 5 or 10 more seconds on that. So does that format make a difference? If I had music, I would play it, Todd, but I don't have music. So.
How come the Jeopardy music popped into my head?
Right? Well, it'll pop in your head a couple more times throughout this presentation, I'm guessing. So,
I think
I'm still seeing results, and I want to just make sure we have enough time to collect people's responses. All right, it looks like they have slowed. So I'm going to go ahead and stop that poll, and I'm going to show the results to the audience. And it does take a couple of seconds for that to pop up on people's screens. But in case it didn't pop up on your screen, I have the results in front of me. And Todd, the results show 79% of our participants said yes, 7% said no, and 14% said don't know. So with that, I'm going to clear those results off of your screen. And Todd, I still have it on slide 7. Is that where you want to hang out for a minute?
Nope, we want to go to slide 8.
All right, I'll do that.
So slide 8. So yes, how an invoice is sent has a dramatic effect on on-time payments. So if you move on to the next slide, so we're talking about the size of the problem in the U.S. market, and so I'm not surprised by those results. But let's take a look at it. So how big is this problem in the U.S. today? First, there's an estimated 25 billion invoices exchanged. You want to go back one slide? Exchange annually between U.S. businesses, with 75% or roughly 18 billion requiring some form of manual processing. And as a result of this, the inefficiency in the manual processing is costing U.S. businesses an estimated $166 to $203 billion annually, with a significant impact on on-time payments. So, for example, it is estimated that only 45% of paper invoices are paid on time. And as the poll results showed, this should not be a surprise when you think about how long it typically takes to get a paper invoice into an AP system and the process for approving it for payment. On average, it takes at least 12 to 15 days for that paper invoice to get entered and processed for payment into the system. You compare that to e-invoicing, where they typically are ready to be paid in less than 3 days. It significantly improves the on-time payment for the invoice. The other negative impact that manual or paper invoices create for businesses include duplicate and fraudulent payments, overpayment, and just poor data quality and data entry errors. And as you can see, these are sizable problems U.S. businesses face within their invoice processes. Next slide, please. So as we start thinking, you think about the size of the problem, and then you start thinking about how businesses connect to one another. Really to fully grasp the context of the problem, we need to explore how U.S. businesses and the different delivery models that exist in the market. So invoicing involves two business domains. You got the seller and the buyer. And for e-invoicing, connecting these domains requires a coordination and system integration to orchestrate the data exchange. Thus, a third domain, the technical connection, exists to bridge the two business domains. Seller domain consists of selling of goods and services. That requires the processing of an order and the creation and the rendering of an invoice. To do this electronically, they need to have an onboarding mechanism that should not be overly hard to do, and that they can reach as many of their trading partners as possible. The buyer domain consists of procurement and accounting organizations that issue and process the purchase order, validates the invoice, and integrates and accounts for that transaction. To do this electronically, they need the commitment and organizational buy-in, and they need the systems and workflow integration to enable that. Bridging these is that technical connection layer where the exchange occurs between the seller and the buyer. This layer creates and delivers properly formatted electronic invoices, preserving the authenticity, integrity, and voids non-repudiation. These are the different network models, the service and solution provider platforms, and the standards for messaging, security, and data that enables that exchange to occur. Next slide, please. How these connecting and sellers and buyers occurs in the market, essentially there's two different models or primary models that exist. The first model, or the two-corner model, is when two trading parties connect to one another in a direct bilateral fashion. This approach has been around for a long time. Actually, it's been around since the early 70s, and it's been popular for high-volume electronic data interchange, or EDI, relationships in specific industries such as manufacturing and retail. In fact, I've heard of statistics that there's around 300 companies globally that drive the majority of the EDI volume when you start thinking about some of the big auto manufacturers, for example, or some of the big retailers that are operating in the U.S., such as Walmart and Target. They're the ones that are driving a lot of that volume. The other connection model is the three-corner model that supports sellers and buyers, and that is using a single platform to exchange documents, and that supports interoperability within the network. So buyers and sellers connect to the network, and they can exchange the documents amongst them, and has been the primary growth model in the early stages of supply chain automation and e-invoicing. However, these two models have limitations. The two-corner or direct connection model has no network effect or evident scalability due to its one-on-one nature. And the three-corner network model creates limited network effect within the network itself. It allows the sellers and buyers on a network to connect with each other. However, if my trading partner is on another network, I have to join that network, or they need to join my network. And so how these models affect sellers and buyers, it varies between them, and the models have created challenges and barriers to widespread adoption for e-invoicing. So let's transition to what are the barriers and challenges for e-invoicing. So next slide, please. There are multiple barriers and challenges to the U.S. to achieve widespread e-invoice adoption, some of which I'll highlight here. First, e-invoice approaches are very diverse and complex, just as I described in the last slide with the two- and three-corner model. There's a wide array of e-invoicing definitions, syntaxes, formats, technical standards, and complexity involved in data translation, data formatting, transmission protocols, and transmission channels in the U.S. market. Next, many large businesses have adopted e-invoicing to gain benefits such as processing efficiency, cost savings, transparency, error reduction, and data accuracy. However, small and medium-sized businesses participate in e-invoicing as required by their larger trading partner, they lack the financial and technology resources and, quite frankly, the subject matter expertise to implement e-invoicing solutions on their own, despite the positive returns that they can deliver. Also, until recently, there's been a lack of definition on what a true e-invoice is in the U.S. market. And as a result, other forms have been used that have automated a portion of the process, such as sending an invoice through an email. However, they may create new manual processes on the receiving end or require additional costly automated process to be developed to support that. Additionally, large businesses have invested in proprietary e-invoicing standards, creating market fragmentation. And as a result of the lack of unifying standard or semantic models, service providers operate in these isolated islands of e-invoicing, limiting their reach. And then finally, there's an absence of an industry-led coordination, collaboration, and leadership to develop strategies, policies, and support for implementation of a change. Together, these barriers and challenges stand in the way for widespread e-invoicing adoption, which is costing U.S. businesses in transaction efficiency. Next slide, please. So the upside is the opportunity if the market could overcome the barriers and challenges. To achieve straight-through processing of B2B transactions, from invoice to payments to cash application, e-invoicing is the necessary first step. There is significant opportunity to reduce the cost businesses incur with manual processing of invoices if broad adoption is accomplished. For example, U.S. businesses can save anywhere from $4 to $8 per invoice if they're converted to electronic. If you extrapolate that across the 75% of the invoices processed manually, broad adoption can save anywhere from $75 to $150 billion annually. And if we just look at our federal government, they could save an estimated $266 million annually if the 21 million inbound invoices were electronic. Along with the cost savings, there's other opportunities exist for U.S. businesses to benefit, including enabling working capital improvements such as early payment discount programs and trade financing. And then finally, e-invoicing significantly reduces payment risk, late payment fees, and increases on-time payment to sellers. So there's significant upside to pursue approaches that help businesses to increase the adoption of e-invoices. Next slide, please. Given the barriers and challenges facing the United States, we can leverage the lessons learned from interoperability frameworks implemented in other countries. First, substantial evidence from countries and industries that have developed e-invoice frameworks show the benefits are achievable at a reasonable cost. The United States can emulate these results. Many U.S. multinationals lead the world in e-invoice adoption, and their lessons learned offer useful insights to increase U.S. domestic adoption. Second, recently, countries with the highest level of e-invoice adoption rate include those with government mandates put in place to improve collection of taxes. As an example, Mexico, for example, they have what's called a clearance model where they have a 90% adoption rate for e-invoices. That's where the government sits in between the buyers and sellers and essentially it stamps them or approves the invoice in order for it to be compliant from a tax perspective. So there's a high adoption rate. Not to say that's the way the U.S. market would go, but we can also look at other motives, other fiscal motives. For example, if we look at the European Union, they had recognized the efficiency gains can arise from e-invoicing as well. And so, in fact, it's requiring all of their public sector entities to be able to receive a standardized core invoice this year. For large public contracting entities, so you think of like the state level or large cities, and by 2020 for smaller contracting entities, so down to the city level, for example. The EU is also encouraging its member states to mandate e-invoicing from a seller perspective. So there's two different approaches there and lessons that we can learn on how e-invoice adoption can increase. And then third, similar to Europe, markets such as Singapore, Australia, and New Zealand have recognized the efficiency gains that can be achieved in both the private and public sector through the use of e-Invoice interoperability frameworks. They view e-invoicing as an important component to modernize business processes in this digital age. And so how to get there, one thing in common across all of these frameworks is that they introduce a new way for businesses to connect with one another. Next slide, please. So given the challenges and barriers businesses face in the U.S., a lesson learned from interoperability frameworks implemented in other countries, the BPC believes that a strong business case exists for implementing a four-corner e-delivery network. So if you hit enter, Gene. So if you take the current model that exists where there's a single provider hub in a three-corner model, and if you take a bunch of those together and create what's called a four-corner model through a series of access points, you can essentially facilitate broad interoperability and a network effect, allowing businesses to exchange invoices across multiple platforms in a interoperable way. So so connecting these platforms and solutions in a common way, creating this multi-provider exchange hub that supports this concept of pervasive interoperability, generating that wide network effect. In order for a four-corner model to exist, you need to establish a set of policies, guidelines, and standards that enable businesses and service providers to connect with each other to enable that seamless exchange of e-invoicing. And that is what the interoperability framework does. Next slide, please. So the intent of the framework initiative that the BPC is doing is to create a catalyst to accelerate the adoption of e-invoicing in the United States. So establishing market standards will enable interoperability results in a positive network effect for adoption. E-invoicing reduces those business costs by an estimated $4 to $8 per invoice, which could result in a potential aggregate annual savings of over $100 billion if e-invoicing became ubiquitous in the U.S. The benefits of such an approach are widespread for all stakeholders, including businesses and service providers. So if we move on to the next slide, there are three key concepts that people have to consider that are part of a framework. From an interoperability perspective, it needs to enable sellers and buyers to exchange e-invoices in a compliant form, irrespective of the information technology environment, e-invoicing solution or service used by each party. So in order to do that, you need to be able to address the electronic networking addresses used by parties, and they should be easily discoverable. So I need to be able to find somebody across the network. Think of it, and the analogy would be a phone network where I can find somebody to make a call, and I can discover that. And that's how the telephone technology works. From a security perspective, it needs to ensure that the exchange of information between sellers and buyers cannot be intercepted or altered during transit. So to maintain credibility and security, communication within the framework should be limited to only those participants that are allowed to be on the network. So you just can't let anyone join. There's got to be a process for authenticating the participants. And then from a standards perspective, it needs to define the semantic data level standards of the core set of e-invoice data elements that should be expressed in a required technical syntax and delivered through an established set of standards of messaging transport protocols. Delivery and processes should be made possible using a variety of implementation practices and models. These are the three key concepts that all frameworks have in common. In addition, the frameworks have 4 different layers of interoperability that they need to address. Next slide, please. The 4 layers required to support the business functions of e-invoicing include the legal interoperability that addresses the contractual agreements between various parties involved in the exchanging data across an open federated network. If applicable, legal agreements complying with legislative requirements, including policy decisions by governmental bodies at the federal, state, and local level. From a business interoperability perspective, business interoperability addresses business processing scenarios and capabilities of the receiver and are identified by the sender during the discovery process. It also covers the use of business identifiers required that uniquely identify a business to enable business discovery. And it covers how businesses discover across an open federated network used to determine the authentication capabilities and how to send an invoice to the receiver. The semantic interoperability within the framework addresses a semantic data model that facilitates the common understanding between sellers and buyers in the data exchange in a framework. The semantic data model reduces the complexity and cost in the data exchange across the open federated network. The semantic data model defines the parties and roles, the business functions, business processes, business terms, and business rules for the invoice data elements. All frameworks use an open, non-proprietary set of standards, resulting in a semantic data model that becomes vendor neutral. Additionally, to move the data, you need to have a syntax, which is the set of rules that define how the semantic data model information elements are structured and used between access points on the open federated network. And then finally, from a technical interoperability within the framework, it needs to address the technical components that enables the open federated network of access points where sellers and buyers can connect once and trade with anyone across the network. Sellers and buyers, through their service providers, use access points to exchange invoices. Service providers are able to serve their customers by receiving and sending standard e-invoices between them and by integrating them into the seller and buyer's back offices. This enables the message exchange between them. And to move the invoice between access points, a set of message delivery standards are used that enables the interoperability, the security, the reliability, and the trust between them. And then finally, from a security perspective, security needs to enable trust. It needs to address both technically through the standards and the public key infrastructure, and supporting business agreements for all parties involved that are involved in the exchange. These are the 4 layers of an e-invoice interoperability framework. Next slide, please. The framework is an important component to enable ubiquitous adoption of e-invoicing in any market. For example, it addresses the key barriers in cost-effective adoption of e-invoicing through this open federated network of access points. It facilitates mass connectivity where businesses can connect once and seamlessly exchange invoices with anyone. It is required because if our goal is to have end-to-end straight-through processing, e-invoicing is the necessary first step to achieve that for B2B payment transaction, and it can support the adoption of electronic payments. Now, these are some of the reasons the importance of a framework to enable ubiquitous adoption of e-invoicing in the market. So I guess the next question is, what is the benefits? What are the benefits with this approach? If we move on to the next section. Businesses benefit in many ways, including the framework can enable buyers and sellers to connect once and seamlessly exchange e-invoices with anyone across the open federated network. The framework effectively connects various 2- and 3-corner connection models that I discussed earlier to create the 4-corner model. The framework could reduce the number of external connections businesses need to maintain, resulting in decreased operational costs and security risks. You think about how many trading partners a business has. They could have anywhere for 1,000 connections that they might have to maintain. If now that gets down to a handful, that's a significant benefit to them. The framework could replace many manual processes and automate the data exchange in the end-to-end process, which provides the opportunity for significant performance improvements in the accounts payable function. So the framework helps enable that AP automation by helping support seamless exchange of electronic invoices. The framework could improve data quality by reducing the errors through automation of the data entry. So it's no longer that the invoice is being manually keyed into the system. It helps enable early error detection. You can spot errors much more quickly with an electronic invoice versus trying to figure it out on a piece of paper or if it's manually entered. And it accelerates the invoice approval process. The framework can improve likelihood of on-time payments and create the opportunity for businesses to develop different working capital strategies. In paper invoicing, you cannot develop effective working capital strategies. It's you're just-in-time payments all the time. Whereas if you had the access to that invoice information earlier, you can develop different strategies on how you want to pay, when you want to pay, and what form you want to pay. So there's different ways of handling that the framework can help enable. And then the framework could provide a reliable delivery and receipt of invoices, resulting in that reduced operational risk of duplicate and fraudulent invoices. The framework could lead to improved business relationships between the seller and the buyer as they both benefit from the overall efficiency in their procure-to-pay process. And then finally, the framework will help reduce the technical and implementation barriers for businesses, especially for small and mid-sized businesses where adoption of e-invoicing solutions to date has been fairly cost prohibitive. So these are some of the benefits businesses will gain. So the question then is, how do service providers benefit? There seems to be a lot of work on that side. Next slide, please. Service providers benefit with a framework through a couple different ways. First, the framework provides assurance, and it essentially helps lower the risk to the investment in the development of an e-invoicing solution. This allows service providers to innovate and offer value-added services to customers. One of the biggest challenges that the service provider and my experience and background is that it costs time and effort to integrate into the different models and using the different standards. By having a single standard or a defined set of way to connect and to exchange to facilitate the invoices, facilitate that exchange of invoices, fewer ways of doing it helps speed the implementation time and bringing in that revenue. So the framework provides those reduced operational and maintenance costs and the technical burden required to facilitate the exchange between the numerous accounting solutions, platforms, and systems through this set of standards that support the e-invoice exchange. And the framework can lead to be a potential catalyst for new markets, business models, and products and services to emerge to enable that exchange of data, especially in areas where it's been probably a lot more challenging to innovate around, and that is to support the smaller and mid-sized businesses, because that's where your ROI, your client, to capture that business, it costs money, and so if you're not going to get the invoice volume, there is a bottom to the market that you're willing to go after. And so by having the framework, by having the set of standards, you should be able to innovate in those areas. So these are some of the benefits the framework will provide to service providers. And finally, if you bring this up even at a higher level, from a U.S. market perspective, there are some societal benefits as well. If we go on to the next slide, please. And these benefits include one is that the framework can help reduce the negative effect of these inefficiencies caused by the market fragmentation through establishing and adopting a common set of standards supporting the e-invoice exchange. Secondly, the framework provides this cost-effective approach for the market to address the small and mid-sized business and the barriers for them to participate in digital trade. And the framework can provide other societal benefits, such as reducing the payment fraud risk, better allocation of resources through the efficiency within a business for automation, and the reduction of carbon-based products and greenhouse gas emission due to the printing of paper. These are some of the benefits that the U.S. market and the society as a whole can achieve through a framework, or quite frankly, just broad adoption of electronic invoice. So I think I've been talking for a while now, Gene. I think I need a break, but I believe we have another poll question. You want to go ahead and ask that poll question?
Yeah, thank you so much, Todd. I appreciate that. And yes, I was hoping our participants would grab their mouse, and I will read aloud our polling question. And I'm just going to make sure that gets onto their screens. Okay, so I launched that polling question. I'll read it aloud, and I'll also give the options for your responses. So the question is, what are the 4 layers of an interoperability framework? And your options, you have 4 options. The first is legislative, business, data, and technical. The second option is legal, business, semantics, and message delivery. That third option, or option C, is legal, business, semantics, and technical. And the fourth option is legislative, business identifiers, information, and network. So what are the four layers of an interoperability framework? You want to go ahead and provide your response, and I'm going to give you a little time for this one. Let it sink in and make your selection. I see some results still coming in, so I'm going to give them at least 10 or 15 seconds.
Oh, that's fine. I think this is a tough one. That was a couple slides ago, so.
Well, some of the options are very similar, so make sure you read those options very carefully. All right. Okay, I always had this strategy whenever I took a test. If I didn't know the answer, there was always one obvious question to always select. All right. Well, I don't see any additional results coming in, so I'm going to go ahead and stop that poll, and I'm going to show the results. And hopefully, Todd, you see them, but even if you don't, I'll go ahead and read you what the results are. So 74% of our participants chose C, legal, business, semantics, and technical. And then the second was 17% with B, legal, business, semantics, and message delivery. And then A and D both had 4%. So there you go. I'm going to clear those results, and I'm going to advance to the next slide and turn it back over to you, Todd.
Perfect. And that was my strategy when I took a test. If I didn't know the answer, I always selected C. So, which was the right answer. Thanks, Gene. So if we move on to the next slide, we're going to start talking about the key findings. And the intent of the framework initiative is really to create the catalyst to accelerate the adoption of e-invoicing in the United States. And so the summary of the key findings from our assessment performed by our technical feasibility and semantic work groups can be found on this slide now. So in the overview report, we have listed a series of key findings from the assessment of the two of the four layers of an interoperability framework. From the technical layer, the BPC conducted an assessment of the components of an open federated e-delivery network, and from a semantic layer, an assessment of the semantic data model for an interoperability framework. And this slide represents the findings that, you'll find in this overview report. Like most importantly, the four-corner architecture creates the desired outcome of this open federated network of access points that enables the exchange while not disrupting the current implementation. It's complementary to them. And that was an important thing, that whatever we do from a U.S. market perspective, we cannot disrupt the 25% of the invoices that are exchanged electronically today. It has to be complementary to them, and that the target is that 75% getting the paper out of the process. And so a four-corner model helps enable that. Second, the standards must meet the security requirements to enable a trust environment to exchange e-invoices. And so we did find that from a technical perspective that the security measures used in the e-delivery network do support the U.S. market requirements, and that businesses can feel confident that the information that's being exchanged is being exchanged in a secure way. Third, the message delivery standards support the necessary scalability requirements for the U.S. market, meaning that if we were able to convert the 18 billion or that 75% of paper invoices into electronic, the standards can support that from a message delivery standpoint. Fourth, the e-delivery network resides outside of the payment system. One of the things that we wanted to make sure that it wasn't going to disrupt the existing payment infrastructure, and that it's payment method agnostic. So it's not reliant on one single payment method, but it can support all payment methods, and it does not hold any sensitive payment or account information. The e-invoice can carry payment information to enable electronic payments through the payment rails if so desired. Fifth, The semantic data model reviewed from Europe aligns closely to the U.S. requirements with one notable exception, and that has to deal with the tax schemes Europe uses versus the U.S. So Europe uses a value-added tax. The U.S. has sales and use tax, and there's different rules around those. And then lastly, the assessment found no unique requirements to handle cross-border invoicing between the U.S., Canada, and Mexico. In fact, the semantic data model can be used for domestic invoicing in both the U.S. and Canada, and that's our approach as I start talking about in the next steps as the model gets developed. So these are some of the key findings from the assessment. You can read more about them if you go out to the BPC website and download the report on the e-delivery network, which is available now. And then, as I said earlier, the semantic data model assessment will be available at the end of the year. So if we move on to the next slide, we're going to start talking about what is the path forward after the assessment. So next slide, please. The BPC believes, and as demonstrated in Europe and elsewhere, that these existing frameworks are positioned well to enable widespread e-invoice adoption. And the United States has the opportunity to achieve similar results by leveraging the learnings, standards, policies, and guidelines developed by those frameworks and customizing them for this market. If you move on to the next slide, by acting as a leader catalyst, the BPC will continue to coordinate the e-Invoicing Interoperability Framework initiative with industry stakeholders. So the BPC next steps include continuing the assessment work by creating specifications for the U.S. semantic data model. This work will be valuable beyond supporting just the interoperability framework. We will continue the assessment to work by conducting a validation exercise of a registration model most likely suitable for the United States, and the document considerations for the adoption of for adoption. And so this work is validating the key findings that we had in the e-delivery network report. And so we're doing this assessment where we are connecting access points in Canada, U.S., and Mexico to facilitate the exchange of an e-invoice. And then finally, we're going to conduct an assessment of existing governance models and organizations and provide recommendations for a governance structure or model for the U.S. Now, every one of these frameworks have some sort of governance mechanism to them, and that's an important component in any sort of framework or network where there is an organization that oversees the participants and the standards and the legal requirements that are involved within the framework. In early 2020, we will be hosting a second webinar that's going to be focused on the details of the e-delivery network as well as the semantic data model report. So watch out for those details to come shortly. And then finally, if you're interested in doing work and joining the BPC, you can go out to the businesspaymentscoalition.org to help support the path forward as we look to continue this work with the industry stakeholders. And I think, Jean, before we do Q&A, we have one last poll question for the audience.
I think you're right, Todd. So grab your mouse, and you should see that question pop up on your screen, and I am going to read it aloud for everyone, and then also read your options aloud. So the question is, does the benefits for establishing an e-Invoice Interoperability Framework make sense for the U.S. market? And you have three options: yes, no, or not sure. So I'll read it again because I do see some results coming in, but they're still coming in pretty fast. But I'll read it again. Does the benefits for establishing an e-Invoice Interoperability Framework make sense for the U.S. market? And you have, you can select yes, no, or not sure. So I'm going to just dance for a second and try to stall because I still see some results coming in. All right, they've slowed pretty significantly, so I'm going to go ahead and stop that poll, and I'm going to show the results, and I will share those results, Todd, especially with you if it has not popped up on your screen, but 98% of our participants answered yes. And then it doesn't look like, and no one selected B, and then 2% selected don't know.
That's ubiquitous.
There you go. So I'm going to go ahead and stop that poll, and I'm going to turn it back over to you.
Thanks a lot. I appreciate it. And that is exactly why we want to, the Business Payments Coalition wants to pursue this, is that we do believe that there are significant benefits by creating this set of standards, the guidelines, and the policy for a framework for the market to address this particular issue. Again, our desired outcome is to increase straight-through processing and increase B2B payment transaction efficiency, and invoicing is that first step to accomplish that goal, and that's one of the reasons why the Business Payments Coalition is pursuing this initiative. So we do have a series of questions that we want to go through, and I'm going to, I guess I'll field these questions. So, Jean, are you going to ask the question, or do you want me to just ask it? And then
I'll ask the question. Let me just let you have some time to pause and take a drink if you need to. Okay. Just a quick reminder, because we did get a bunch of questions in, but if you have a question or a comment, feel free to submit that through the webinar platform, and you can use the Ask Question button to do that. But Todd, the first question is always a good one. How do I get involved with the future work?
That is the BPC membership is the source of the folks and the knowledge and the expertise that we rely on in any initiative that we're doing. And so one way is to go out to the Business Payments Coalition website. Just Google that, and you'll come across the link, and there's a membership link on the website. Another way is to email us afterwards through a connection. I think there's an email response that we can provide, and just share with you or share with us that you're interested in joining, or you can connect with me on LinkedIn. There's a third option, and I'll direct you to the right spot. So those are the different ways to make that initial connection, and then we can talk about, what type of support would you like to provide, and which work group that we have doing different parts of the next phase of developing the requirements and doing the validation and assessing the governance organizations. So those are some of the ways that you can get involved with the Business Payments Coalition, and the first step is to contact us. Right, so let's go to the next question.
Okay, so the next one isn't exactly a question, it's a comment, but I'll read it aloud and then you can respond as you see fit. So the participant says, although I'm not a user of the service, Bill.com seems to have addressed many of the issues by connecting the seller and buyer via online electronic channel. It is my understanding Bill.com sends e-invoices and then collects the payments electronically, or ACH, and that's all they've stated.
So Bill.com is really built off of that three-corner model where you have a network of buyers and suppliers connecting and exchanging invoices electronically, facilitating payment. And there's many different networks that do that. And depending on, there's different models. There's a seller model, there's a buyer model. They each have different ways and one's in a different driver's seat. The seller's in the driver's seat, and the seller electronic invoice presentment platform, or a buyer in a buyer electronic invoice processing platform. So depending on who's in the driver's seat, and Bill.com has done that. And there's, again, multiple networks like that. The challenge, though, is, that network doesn't have the pervasive reach to get ubiquitous exchange of an invoice. And so if you could take 5 of those Bill.com-like networks and have them work together collaboratively and being able to facilitate the exchange of an invoice from one network to the other network, which is what the Interoperability Framework is designed to do through the use of different standards, then you get that reach that we want to get to help bring down the amount of paper invoices and manual processing that exists in the market today.
Okay, thank you for that. Next question. What is the main difference between the 3 and 4 corner models?
I think that the main difference between the 3 and the 4 corner model is that the 3 corner model is really you're only connecting buyers and sellers through a single provider hub, where you only reach and send documents within in the control of what that provider hub can do. So you have to be enrolled on that particular network. The 4 corner model, I think the key difference is that it becomes a multi-provider hub where you're exchanging invoices from one provider to another provider and reaching that seller on one network to that buyer on another network without having to have the seller or the buyer join each one of those networks to be able to facilitate the exchange. The challenge that businesses face today is they have to remember many different logins to go onto these different networks to either send an invoice or receive an invoice. That causes issues from an operational standpoint because somebody within an accounting, accounts payable or accounts receivable or billing, they have to remember all of this. And so if you've got a lot of training partners and they have a lot of different platforms, you've got a lot of different business processes that you support. So if you can do it through a single connection, it becomes a lot easier, and that's what the 4 corner model facilitates.
Okay, thank you so much. The next question, and I know that you just talked about the 4 corner model, so if you already answered this, please just dismiss. In the 4 corner model, how does one hub know where to route an invoice? Would there be a business invoice directory?
There is a series of this is a great question. So there's a way of how there's a registry process, and there's a way to do dynamic discovery. So it's probably analogous to a phone number where if Gene wanted to deliver an invoice to me, Gene's system would look up, where's Todd located? And what is Todd's capabilities, and can I send, and where do I send that invoice to? And so through this process of discovery and registry and discovery, that I can go ahead and find that. So it is analogous to a directory, but we don't call it a directory. We call it a registry because it's all systemic. It's all kind of in the background in the technology. That enables that process. I think a lot of people, when they think of directories, it's something that you can log into. It's human readable, and you can discover that through accessing it through a GUI or something, or a graphical user interface, or a web page, for example.
All right, thank you for that. So, Todd, I just want to mention that we do have quite a number of questions, and I don't want to rush you. I just want to let you know that we might need to do a little rapid fire here. We can go a few minutes over if people can stay, and of course, if you can continue to answer questions. But I just wanted to let you know that. So the next question is, how can e-invoicing fit into a larger scope of electronic interoperable framework for buyer procure to pay and seller order to cash requirements? Sorry, that question was a little bit tricky. Do you want me to read it again?
No, I completely understand it. So the framework, it establishes what's called this e-delivery network, and quite frankly, the way a message, the payload within in the message that's going from, let's say, a sender to a receiver, it's agnostic on what it can carry. So we're talking about invoices here, and so one of the first steps is to pick something that could be agreed upon between buyers and sellers, and that's an invoice, and that you need that to facilitate the payment. And so the invoice is being defined here. But outside of the invoice, any document, as long as two people sending and receiving agree to that document, that can be exchanged through this e-delivery network. So purchase orders, purchase requisitions, delivery notifications, any sort of supply chain document could be delivered through this e-delivery network as long as both parties agree. And in fact, that's what's being done today with some of these other frameworks that exist in other markets. They're being used for, in the public procurement side, pre-award, where I do a tendering out to the market and the market responds to that tender, and that those documents are flowing into the public procurement entities. As one example, as well as the invoices. It's being explored in the transportation area for sending the intermodal transportation arena. So, think about ship, plane, truck, how a package gets delivered from, one continent to the other. There's a lot of different transports that are being used, and these e-delivery networks or these frameworks are being used for those. So there's different ways to address this, and it can be used in the overall procure-to-pay and order-to-cash cycle.
Okay, thanks so much for that. The next question, I'm jumping around just a little bit. In terms of access points, does that mean current e-invoicing systems and platforms that are in use today?
The access point it's this node on the on an e-delivery network. So a service provider can create an access point to the e-delivery network, and then they become part of the overall fabric of the network. So access points is just that point of entry or the point of receipt of exchanging documents with everybody that's on the network.
Okay, thank you so much. We're just going to try to squeeze a couple of more questions in, and then we will likely have to connect with the individuals that submitted questions that we didn't get to. We'll have to connect with them in another way. But the next question is, do you feel that there is an opportunity to eventually expand the framework to align with many of the models that are in place in Latin America today, so outside of Mexico?
So one of I think there's an opportunity to align a lot of these different frameworks, and in fact, there's discussions that are ongoing right now with the Business Payments Coalition and some other associations and organizations that are operating in not only the U.S. but also in Europe. One called PEPL, another one called the ESPA, the e-Invoice European Service Provider Association, another organization called Connect Once. We're in discussions about creating, what would a global interoperability framework? So connecting all of these frameworks together so that if I'm in the U.S. and I need to exchange an invoice with somebody in Europe, can I hop an invoice from, let's say, the U.S. over into Europe? And so we're talking about it in that context, which ultimately, using the set of standards that are being defined, it can definitely go into other markets such as Latin America, as long as the business process can be supported. And that's where the challenge, where a lot of markets are looking at what some people call a five-corner market, where you have a five-corner model where you have a tax authority, for example, sitting in between the seller and buyer and doing approval of that invoice. So that's a slightly different model, and there is some discussions on how do you bring that into these frameworks to support pervasive e-invoicing.
All right, Todd, thank you so much. I would love to be able to squeeze in the rest of these questions, but it just doesn't look like we are going to have enough time. In the background, we were discussing how we might respond to individuals. So I don't want to make any promises at this point, but Todd, that discussion is being had right now. I wondered if you had a couple of closing remarks before we officially close out this webinar today?
Well, I just want to thank everybody for joining the webinar today. I really appreciate the time that you spent to hear about the work that the Business Payments Coalition has done this last year, and that the findings from our assessments. The work is ongoing. If you want to join the work and give a lending hand, feel free to reach out. We always welcome all contributions from everybody and everybody's different perspectives with the work that we're doing. So, again, thank you for your time. I appreciate it.
All right. Thank you so much, Todd, and thank you. This does conclude today's Business Payments Coalition webinar. Enjoy the rest of your day.